Welcome back. Got a lot of really good feedback from the dividend search and screen video from last week. So what I thought I'd do is go and download a fresh Dividend Radar for this week, see if there are any changes or updates to that list, and then give you my take on any of those companies. So that video I have in the description and it'll appear somewhere on the screen. All right, and we're back here with dripinvesting.org, and we'll go to Dividend Radar, latest radar from September 2nd, download it to Google Sheets, and we'll go open, select the file you just downloaded. Next, we can import our macro from last week, Chowder, and to do that, I have it saved on my clipboard. Control A, delete everything, Control V, drop it in, rename it, macros, save it, close that tab. We're back here in our new radar. Go to the All tab, extensions, macros, import macro, Chowder, add function. Okay, once it's added, back to extensions, macros, run Chowder, and you might need to give Google permission to run that macro. So once that's done, back to extensions, macros, run Chowder. There's our script, and obviously you can tighten up any of the parameters. Looking at it, two companies came into the screen for this week. We got MPW and VSH Intertechnology Inc. Both these companies in the margin of safety. You got a Chowder number of 12 or more. You got one that's in real estate and one that's in information technology. So we'll take a quick look first with MPW. All right, Medical Properties Trust. It's a REIT, real estate investment trust, specializing in healthcare facilities. Right off the bat, not a huge fan of anything real estate. Increasing interest rates, higher debt burdens, all of these things are bearish for the real estate market. So already somewhat disinterested, but I'll give you my quick take on it. Nice earnings, $1.2 billion, 0.1% dividend. Interested to see their payout ratio. So 57%, pretty high. That's still getting into an area where either this 8.1% is going to need to get reduced or they're going to need to not pay a dividend for a quarter or two. They've been paying for the past 10 years, so that's a good sign. But earnings likely going to drop next year, as is pretty much everything coming out of this bubble. Next 5 years up 10%. Okay, return on equity of only 14%, so that's not great. Nice margins. They got 1.3% insider ownership. That's not great. So we can look at Open Insider just to validate. And yes, that's correct. Last sale is April 8th of this year, and it's the president, CEO, and the CFO, both dumping shares. So that's definitely not a good sign. And they were dumping at $21, and we're at $14 today. Graham would say it's cheap at 57% discounted, DCF of 15.35. A CAPM, a capital asset pricing model of 15%, low earnings yield, not a great return on capital, very high acquires multiple, not cheap relative to Tobias Carlyle's standards, Trusky of 5, and an Altman of 0.9. So this is not great. That is definitely the danger zone for bankruptcy, and that's reflected in their debt as well. These REITs tend to leverage a lot to buy up a lot of real estate. That's why that Altman Z-score is what it is. You need to understand where we're at in a total market perspective. So this is the weekly chart on the top, and it's the daily chart on the bottom. This is TradingView. This blue line is the 30-week MA. The SPY, the S&P ETF, is currently below that 30-week MA. So this is very bearish. I likely wouldn't buy anything until price reaches above this 30-week MA. And if I do, I'm going to be very cautious. So I'm going to have very tight stops and ensure that anything I buy is going to have a stop loss. And as you can see, we have had a huge run for pretty much all of time. And so we are due for a correction. This all needs to collapse at some point, or at least until the Fed pivots, which it looks like they're not having any indication to pivot. Back to MPW. Okay, again, the weekly on the top, daily on the bottom. It's in a pretty huge box here, but it looks like it's going to break down out of it. So I would be interested if it started to move to the top of this box, but it's likely not going to. And same thing on the daily chart. You have the price about to drop out of this box. So MPW, not interested. Next, VSH. All right, VSH Intertechnology, semiconductor company. They've been paying increased dividends every year for 7 years. Nice earnings relative to revenue. They're paying a 2.1, so I bet the ratio is lower. Yeah, they have a 16% payout ratio. No PEG. because we're not looking at earnings growth next year or the next 5 years. We had a huge jump this year. All these great numbers are because they've had a great year or the past year, as have pretty much all semiconductor companies. 20% return on equity, decent margins, insiders, nobody really owns it. We could take a look at that to validate. Same thing. You got this executive selling and the president. And this is last year, so not really a factor for us. DCF of 24, got a current price of 19, CAPM of 20, earnings yield 21, a return on capital 29. That's pretty good. Requires multiple 5. That's pretty low, and that's good. Petrosky of 6, Altman of 3.1. So we're in the margin of safety there with Altman. And Petrosky, you want a 7 to 9, but a 6 is not bad. And decent 10 cap, return on invested capital, RV to operating cash flow, and EV to sales are all pretty good. This is a bit more interesting. And I like this 16% payout ratio, vice the 50-some% from our last company. Let's take a look at the technicals. All right, VSH is right there at the 30-week MA, pan out a bit. See, they had a really nice run back here in 2016 up to 2018. So stage 2, stage 3, stage 4, stage 1, stage 2, stage 3, stage 4. So we could be coming out of a stage 4 decline here. And if you don't know what I'm talking about, it's from Stan Weinstein's book, Secrets for Profiting in Bull and Bear Markets. It's from, I think, 1988, but it's really what most technical traders use, and there's variations of it. Guys like Bill O'Neill, Paul Tudor Jones use a very similar method, but basically stage analysis to find what the trend is and to ride that trend and to get out when the trend ends. And I find it to be good for defining what your entry and exit points are, which are essential to everything that you do, whether you're trading or investing. So just below the 30-week MA, just broke below. So I'd want to keep an eye on this and see if we can get back above that. I doubt we will, just knowing how the overall market is, and we have a breakdown below the 30-day MA. All right, so VSH looks more interesting. I would definitely add this to a watch list and consider making a buy after a bit more research. In addition, wanted to give a quick plug to the Twitter page. Sasquatch is live and actively posting on Twitter, mostly just fundamental and technical analysis, whose companies have earnings this week, and also on companies with high volume. Eventually going to have a script to automatically post these, so I'm not doing it myself, and I will definitely make a video on that, on how to make basically a Twitter bot. All right, that's all I got. I'll leave everything I've mentioned in the description, and if there's a company that you might want me to take a look at, then leave it in the comments or shoot me a message. All right, thanks. Bye.